Hey everyone, Sean Maloney, Digital Business Masters, another DBM Strategy Call for Monday, the 7th of July. Okay, this year is racing by for good reason. There's so much to be pleased about. There's so much going on. It's a complete transformation. It's vindication. It's all the things that we've been working on for well over a decade. So what I do on this call every week is I distill to the best of my ability all the updates from the previous week to show you the big picture, because this is the most valuable information in the world. There's no question about that. It doesn't matter. I don't care what you're talking about. This is the most valuable information in the world for ordinary individuals. All right. And then in part two, because it's not good enough just to realize and be educated and informed about what it is that this industry is about, you've also got to apply that realization and education. You've got to go and do things with it. Now, that's the hard bit, of course, obviously, doing things. You can always be analysis by paralysis. You can watch other people at the gym all you want. But at some point, you've got to get out there and do it for yourself if you want progress. So we have a business system, a blueprint, very successful blueprint. Isn't a straight line. It will test you. There's all sorts of challenges you have to put up with. But that's the difference between success and failure. It's those who can sustain and build their factory, their digital business system will win. Those who stop and moan and groan and give up and blame and kick out will fail. That is just life. All right. So we'll cover both aspects in today's session. And I appreciate you being here, especially if you're over on YouTube. If you're listening to us on YouTube, hit the bell, hit the subscribe. We're looking to get back up to those levels again of subscriptions so we can get this message out to more and more people through the good old YouTube algorithm. Our job at DBM is not to give you any financial advice whatsoever. We have a business system that's built on digital assets. It's a mechanism that allows us to build out a balance sheet based on digital assets, mainly Bitcoin, and then we leverage that, we collateralize that balance sheet towards allocation of funds to all sorts of different technologies, startups, cash flow mechanisms, etc. We talk about that in detail in part two of this call. We're certainly not here to give you any financial advice. What you do as a grown adult is your business. You know, it's for you to decide what you do with the realization and education that hopefully this type of video provides. Why are we so bullish and confident and aware? Why are we still here 15 years after we figured this out? Why are we still driving a well-established academy 5 years after we started that process of DBM back in 2020? Well, because we fundamentally understand this slide. And if you're new to this type of language, this type of awareness and realization, and you're hungry for education, then this slide will keep you hungry for years and years and years, because until you get to the point where you've utilized your skill and energy and time that is providing you a fiat income. If you don't know what fiat is, fiat currency, then you need to get into the academy and understand what that is. If you're still in your 40s, 50s, and 60s chasing fiat income and then directly purchasing and buying liabilities, and you're wondering why you've still not got enough savings or enough purchasing power or enough freedom of choice or enough opportunity in life, then you're not understanding what it is to convert a proportion of that devaluing fiat currency, 7 to 10% per year devaluation in purchasing power, 7 to 10%. You're still not understanding what it is to convert a proportion of that devaluing fiat currency across to accretive assets. The irony is assets mainly go up in price because of devaluing fiat currency, not because the underlying value of the stock, of the pension scheme, of the savings account is going up in real terms. It's going down. It's taking more dollars, more fiat, more euros, more fiat, more pounds, more fiat to purchase the same thing. And that applies to everything that you purchase in life. So what we do is we take time, energy, and effort, we create value for other people, Yeah, that could be a job, that could be a small business, that could be whatever else you've got going in your life. And you convert a proportion of that to assets that you know will go up in price as time passes, that you can then use in form of equity, profit, and even collateralization to fund liabilities. That's it. It is as simple as that. But the realization we find, and the education and the skills and the mindset, is the thing that we find most people struggle with, because they've been brought up by parents, teachers, bosses, banks, governments who have told them all their lives just to work in a system, get as much fiat as you can, and hope for the best. Those days are gone, I'm afraid. I'll show you why as we go through this next few minutes. So, to take that a little stage further, because a lot of people ask, well, okay, that's all well and good, but what does it look like in reality? What does that look like in practice? Well, as proven over the last 15 years, with what we've been doing with just Bitcoin, is we've understood that we are moving our devaluing fiat-based currency into hard money. So Bitcoin represents what's known as hard money, sound money. There's only so much of it that can ever be produced, and it's in infinite demand. Okay, it's immutable, it's fungible, but most of all, it retains purchasing power. And it does that because of the natural supply and demand laws of economics. But what's been most interesting over this past decade has been most of the growth has come from the devaluing nature of the fiat currency that most people still compare its value to. So those of us who have been enjoying a 68% CAGR, CAGR, if you don't know what CAGR means, and go into the academy, those of us who have enjoyed 68% CAGR per year, so it's compounding growth per year on Bitcoin, you can imagine why we're so bullish and relieved that we took the decisions we took many, many years ago. In the second part of this call today, I'll show you how we leverage that CAGR into the future, safe in the knowledge of Bitcoin's appreciation, which means that we can use the balance sheet from Bitcoin predominantly to drive into cash flow that creates a critical mass that allows us to use that cash flow not only to reallocate to the balance sheet, so we have a perpetually growing Bitcoin position, but also hit a certain level that allows us to live our lives 100% from our digital business. I'll actually show you that in numbers in part 2. You can get the link to part 2 in the link in the comments below this video. Now, equity is one thing, but as you'll see when I show you the collateral report, you can't run a business into infinity purely off a balance sheet. You do have to have a profit and loss account as well, right? Because obviously that's the engine that drives the cash, the profit and the loss through your business. And you take proportions of the profit and reallocate it to your balance sheet and go back into the P&L again, right? Obviously, that's how business works. So we also hunt for yield. We're always hunting for yield, permanently hunting for yield. So we're not just interested in equity. We also want yield. Now, it's interesting, just in this last 6 months, we are now finding ways in the traditional finance sector to run yield from Bitcoin. It is quite interesting, but it's very, very early. And only people with significant amounts of Bitcoin can get into that realm as we sit today. But we're doing it at DBM, we're assessing it, and we're front running it and doing all the things that we do. But in the short term, we find our yield from what's called DeFi, decentralized finance. Okay, not TradFi, DeFi. So we're well entrenched within DeFi. We know DeFi like the back of our hand. We know how challenging it is. We know how frustrating it is, but we also know how powerful it is. We actually hunt yields of anywhere from 5 to 10% per month, mainly based on USDT, USDC, which is Circle smart contracts. Not an easy place to be, okay? But for those who persist and have got the fortitude to drive through and understand the relationships and keep moving and planning and organizing, it's a very, very, very great privilege to be able to work with high yield technologies. Now, we don't stop there either, though. We spotted many, many years ago that in this digital technology, that we identified through Bitcoin, we're also able to operate what are called altcoins. Okay. Now, alt means alternative, which is anything that isn't Bitcoin. And you get lots and lots of discussions and opinions around the internet about the differences between Bitcoin and altcoins. Fine, let them have their opinions. The bottom line is that we are small cap investors. Okay. We look for startups and we try to find the best people we can. It all starts with people who are starting up businesses that are trying to get into a dynamic, what's called stock to flow. So if you don't know what stock to flow is, you need to go and read the Bitcoin Standard. You need to go and read Cash Flow Quadrant. You need to go and read these books. But stock to flow is all about a fixed amount of stock supply of a entity that is flowing continually. So it's encouraged to flow. And in that creates the yield. So what we want is altcoins that create equity plus yield. So in Bitcoin, you've got equity. In USDT smart contracts, you've got yield, but they're two separate things. You have to manage them separately. But we also hunt startup altcoin platforms, companies that are looking to create equity plus yield. Incredibly difficult, still very young and very new, lots and lots of failures. And that's okay, because you learn from those failures and you push on knowing you're above the canopy, understanding the big picture, and that's what gives you the confidence to carry on. Again, most retail people will not do that because they either can't be bothered, or they haven't got the confidence, or they don't have the resilience. And that's okay. That's okay. Most people want a lottery ticket win. They want a get rich quick scheme. They want something to happen overnight. You can't work like that. You're running a business. You're not running a hobby. So knowing all this after, well over a decade of work for ourselves and proving this to ourselves, in 2020, we established an academy so that we could organize our abilities to relay how this information is put into the world, along with an education system, along with a support structure, along with a team of coaches. So we established it many years ago. 5 years is a lifetime in this industry. So for us to still be here is an absolute achievement. But in terms of where we are today, you get the choice to decide. If you're listening to this information for the first time, and what I'm about to talk about next grabs your imagination in terms of, wow, yeah, I can actually see now that this isn't any longer about individuals. This is about bosses, banks, and governments making it possible for us as individuals to front run. If that grabs your imagination, but then you're thinking, well, where do I start? Well, where you start is getting your mindset and your skills in place. That's where you start. What do most people do? Most people say, oh, no, I'm okay. Just show me where to press, show me what to spend, show me where to put the money. I'll fly the money in. I'll just get on with it because I don't want to be working on mindset skills. Right? Obviously, most people work like that. Most people want to run the marathon but can barely run a mile. But our suggestion is you start small and you build up, understanding the steps you need to take so that you can create what I'll show you in part 2. So do that with patience and fortitude and, some level of measure. It's entirely up to you. Some people are able to move quickly because they've got the funds, they've got existing skills, they've got existing mindset, and that's okay too. Move through. You'll soon find out where you're up to as you go through the process. But in my experience, the vast majority of people are still trying to figure out, the basics of wallets and key management and security and exchange management, asset management, basic calculators, basic maths, basic spreadsheet skills, and that's all done in the skills and systems subscriptions at DBM. And then as you get more sophisticated, you move into, the management of everything that I've just been talking about. So these are your choices to make. If you're an existing skills person at the moment, by the way, you can take advantage of getting into, skills person, you can take advantage of getting into systems, and you're going to need that. You're going to need to be at the systems level to take advantage of some of the next round of value that we're bringing to the fore over this next couple of weeks. So be cognizant if you're an existing skills person to make sure you get up to that $25 level as quick as you possibly can. Now, let's have a look at what's going on with the macroeconomic and geopolitical side of the industry, which is the fuel. It's the fuel that drives our decisions, that drives our momentum, that drives our enthusiasm and motivation and everything that hopefully this call will provide today. This slide is all to do with just giving you a visual on where we've come from as I say, over this past decade and where we now are. Okay, we're just about to hit all-time highs, probably this week, as we go through what will be, I think it's the fourth all-time high of this year. And there's good reason for that, as you'll see in a minute. And then we kick on from there. We fully anticipate being north of $200,000 by the end of this calendar year. I'm talking about Bitcoin, by the way. And that's because we understand the CAGR, the average CAGR, like I said earlier, 68% over the past 14 years. You're not going to get anything better than that anywhere in the world. I don't care who you are. It's just a case of understanding where this type of yield is coming from. And our job is to guide you through that process and sustain you through the process, because you can imagine how difficult it is. I mean, imagine being around in 2017. Yeah, we thought we were the cleverest people in the world. We thought we'd arrived. Yeah. And was it challenging to hold then? Damn right it was. Just as challenging as it is to hold today. Even more challenging, probably. And then look, went through long, what we call winter, and then bang, COVID kicks in. I'll explain why there's a very close relationship going on right now with what's just happened with the big, beautiful bill, with what happened back when they started printing, the last time they started printing currency aggressively in the time of COVID. It's so easy to predict now because we recognized back in 2008 where they were coming from. Yeah, in terms of how the fiat system really works. It repeated itself all the way through the 2010s, to be fair, but it really got aggressive in 2020 because of COVID. And it's really, really going to get aggressive now. And really aggressive. And that's what we've spotted. And that's why we're so pleased that we own sound money. At the same time, the institutions, corporations, investors, and regulators are figuring out as well. We're front running for the first time in our lives bosses, banks, and governments who historically have just implanted recessions and everything that can throw at us. And none of us have understood because we're working hard. We're working, 5, 6, 7 days a week. We're running businesses. We're employing people. We're doing our best. And we can't understand why we keep treading water. But now we do. And not only that, we front run in anticipation. We take advantage of the devaluing nature of fiat currency. Think about that. So what does that mean on the ground? Well, this is the science bit. And it means a couple of pages these days of updates that are only relevant to what happened last week. Already this morning, before I prepare this session, I've got at least half a dozen points that will be going into next week's session. And it's only Monday morning. This is how fast it's working, how fast it's operating, which is why not only are we so pleased with the position that we've helped people get to, I've said for years and years and years, just own one Bitcoin. You'll now hear me say, just own 0.1 Bitcoin. And 0.1 Bitcoin is in the reach of most ordinary people today. Well, that won't be for much longer. Just as one Bitcoin was in the reach of many people 5 years ago, but it isn't anymore. But that is an exponential curve. Why? Well, because of the points I'm just about to make. So Germany made a foolish mistake. Germany, in the sense of the people they've decided to vote in to run their country. The politicians of Germany made a very foolish mistake last September. Sold upwards of 50,000 Bitcoin that they've taken from illegal activity over the past decade and sold a lot of it. Almost as stupid as Gordon Brown selling the gold in the UK for £250 20 odd years ago. Almost as stupid as that. But now the Germans, the business people in Germany, thankfully, are spotting what's going on. And Sparkassen and Deutsche Bank have now decided to put crypto and Bitcoin services into their businesses. Just like you've seen with all the American banks, just like you're seeing with the big UK banks, just like you're seeing with the big Far Eastern banks over this past few weeks. Yeah. So they're getting it. Finally. You can argue all day long about whether that's good, bad, or indifferent. Right now, it's great because we're riding up, as you saw on the last slide, the demand of a finite asset. That's all we need, a little step. We just need a little glimmer. That's all we need as individuals, because you can make a very good living off 0.1 Bitcoin, as I'll show you in the second part of this call. On the business side, $300 billion Japanese tech giant Mitsubishi adding Bitcoin to their 100 million user reward program. Yeah. So they're seeing that there's a demand in Japan for Bitcoin, and they're front running by getting ahead of that by giving their clients what it is they want. Yeah. In the form of rewards. That's a very interesting model indeed. We'll keep an eye on that. Public companies across the piece. So we speak about public companies every single week. In the second quarter of this year, so just finished this last month, 131,000 Bitcoin went into the hands of public companies, and that's just growing and growing and growing and growing now. You'll hear us talk about it all the time. The treasury companies, the big public companies, they're realizing the accretive nature of Bitcoin. They're following the strategy model, Michael Saylor, and they're moving very, very quickly. Very, very quickly, which is why we're heading into, and probably already are, in a supply shock of Bitcoin. In other words, there's not enough supply to cover the demand, which is why the price, in our estimations, will go through 120,000 this month and well towards 200,000 by the end of the year. All right. At the same time, the ETF, the banking side, ETFs, it's paper Bitcoin. They're 8% increase over the same period. So you can see this has only been happening really aggressively over the past 6 to 8 months. And it's causing these all-time highs that we're taking full advantage of because we've already got our balance sheet fully set to allocate and reallocate. So it's very, very powerful. Publicly trading Chinese textile company, Adantax, okay, 1.3 billion. That's just another example of companies in other parts of the world copying the model. And Trump, who's been very much behind this in many, many ways, maybe not directly, but certainly in terms of what his government represents in their awareness. The entire cabinet of the US government understands Bitcoin, which is phenomenal. So we call it Trump. But in essence, Trump has also got a family business, of course, and 8% of his net worth, apparently, according to Bloomberg, is now in Bitcoin and crypto and growing very, very quickly because of his sons. BlackRock's IBIT is very, very powerful information. Their IBIT Bitcoin ETF now brings more revenue into BlackRock than their entire S&P 500 fund. I'll say that again. BlackRock's IBIT Bitcoin ETF model platform brings in more revenue to BlackRock, biggest bank in the world, than their entire S&P 500 fund. And that is in less than a year. So where do you think that is taking us next? Yeah, just for the time. I mean, lots of us are aware that we keep things in self-custody. We're not that interested in what these public companies and big banks and self-custody companies are doing, because we want self-custody for ourselves. We own the Bitcoin, we own the keys. Don't get the two things mixed up. But we're very happy to slipstream and use the tailwinds of these types of activities to give us just that little step that we need. You should know, certainly as a systems and income subscriber at DBM, you should already know how much Bitcoin and at what price sets you up for life. You should already know that, right? And if you listen to me say that and you don't know what that means, then you know what you need to do in terms of getting the education in the academy. $540 million lending giant, Lendon, has now stopped crypto lending. So that's altcoins, and has moved 100% to Bitcoin only, which is fair enough. Fair enough. Altcoins are incredibly volatile. We know that more than anybody else. Whereas Bitcoin, by definition of everything I've just said on the prior points, is an absolute. It's sound money. It's monetary energy. And they know it, and they want it on their balance sheet. Like lots and lots and lots and lots of companies are starting to realize. Even gold miners like Hammock Limited are putting Bitcoin on their treasury. The irony is not lost on me. For those of you who know how we operate DBM, we also accumulate physical gold. And we do that because we know gold's sound money. Now, do you think we're happy we started doing that 10 years ago? What was the price of physical gold 10 years ago? What's the price of physical gold today? So that's the toga in the suit, right? Gold's not quite as dynamic as Bitcoin. In fact, nowhere near as dynamic as Bitcoin. You certainly can't do what I'm about to show you in the second half of this call with gold. But in terms of having gold sat there as part of your portfolio, it's not a bad idea. All right. As well as the power of Bitcoin's IBIT ETF, BlackRock and Fidelity combined just last week put another $461 million worth of Bitcoin on their balance sheet just in the last week. Does anybody know the value of the total mined amount of Bitcoin that comes out of the system every week? I can tell you it's nowhere near that. That's supply and demand right in front of your eyes. Don't dawdle. Swedish company Hibbett Group announces they will add Bitcoin to their treasury. Okay, the Scandis know what they're doing. The Scandis are very, very clever. They know exactly what they're doing, especially in Norway. But Swedish aren't far behind. And you may have heard some rumors last week that a whale, we could see it. That's one of the beauties of Bitcoin, by the way. If you don't understand that, you can see things on the ledger. You can see things on the blockchain. You can actually track individual wallets and see what's going on. You don't know who owns them necessarily, but you can track them. But some work was done last week because 700,000 Bitcoin was moved for the first time in about 9 years. That's about $7 billion worth of Bitcoin. And it's reported that that belongs to Roger Ver, who is currently in Spanish jail and for all sorts of reasons. But he apparently is behind that 70,000 Bitcoin that got moved. It didn't get sold, it got moved, according to Roger Ver, for security reasons, now that he's going through that challenge. Last couple of updates before we get into the theme of this week's call, which is all about comparing CBDCs and the stablecoins, which is a standoff between two continents at the moment. But on the UK side, last month, tokenized pounds were launched for the first time, first sterling denominated stablecoin from a registered issuer to go live. Okay, each British pound stablecoin, if you will, is obviously worth £1. Okay, and that is now a British company looking to digitalize the British pound. So that's relevant from where we'll talk about next when it comes to stablecoins versus central bank digital currencies. I think it's pretty obvious where we're going to end up. Also, crucially, big news from last week, Robinhood are looking to on-ramp tokenized assets into the stock markets, treasuries, and everything. Okay, they've hit their ChatGTP moment. They're looking at that breakthrough. Okay, it's a new way for the stock market to operate. Now, if you're involved with us with a particular project that is an altcoin project that allows us to tokenize trading, then you'll know the power of what's going on with Robinhood, and vice versa. You'll know the power as Robinhood bring this technology into more understanding by the general public. You'll know the power of the project we're involved with, where we already tokenize stock trading. Yeah, so that's an incredible move there by Robinhood. And as I've said for many weeks now, you may well want to be looking at your stock ownership of companies like Robinhood, just like you should already be doing with companies like Strategy, etc. And just very, very late last night, UAE unveiled that they're offering a golden visa for TON stakers. So I don't know if you guys are aware, but obviously you can buy your way in to visa citizenship, residency into various countries of the world. Everybody is aware of the big one that the US has just launched, the Trump card. But the UAE have now just announced anybody with 100,000 ton can now get themselves a 10-year visa in the UAE. And we'll talk about that more in the future because that's very important and very interesting. And you can compare that to the residential visa through real estate, which is much, much more expensive than 100,000 ton right now. So those of us who are aware of these requirements in the future, because of the way we don't just think about our businesses month to month or even year to year, we plan our businesses, well into the future. We organize our lives to look at life opportunity in ways, and that's a very important step because they're basically making it much easier for people to use blockchain technology to relocate if they so wish. We'll talk about that more in the future. Right, this week's headline topic: CBDCs versus stablecoins. If you've been listening to me for any length of time, you'll know that we've done lots and lots and lots of work on CBDCs. We understand exactly what they are, which is why we are so dubiously cautious, I suppose is the polite way to put it, if you're looking at something like Christine Lagarde and her disregard, despite the crocodile tears and the the centralized globalist attitude she has to European citizens. She's a disgrace. Okay, but either way, you can't stop the person because most people are just following it through. Now we haven't really got a president to speak of or a Senate to talk to in the European Union. Thankfully, as a Brit, we're out of it. But in terms of what's going on in terms of the continent we happen to be located on, you can more or less put Lagarde up against Trump. Okay, and what she's talking about just in the last week is still insisting that they're going to bring in this central bank digital currency model, and they're going to follow the Chinese CBDC model, which has been tested for some time, and its use will be of service to all citizens. That's the arrogance of the woman. Okay, so make of that what you will. Some of you might agree with what she's saying, but I guess we'll find out. Whereas in the US, very shortly, next week actually, they'll be looking to bring policy in that bans CBDCs. They'll be going full stablecoin, as we already know with the Genius Act, and bringing in full crypto regulations as early as this month, reducing the threat of programmable money by government. Now, we never thought we'd be seeing that. And we still don't fully understand the reasons behind that shift, but it exists there now. And you've got Europe on one side and you've got the United States on another side. In terms of these currency maneuvers, these are all to do with currency, by the way, not to be mixed up with what we've been talking about with Bitcoin and accretive assets and everything else. The irony is, whichever way they go with these CBDCs or stablecoins has a positive effect on neutral assets and sound money, gold, Bitcoin. So we win-win anyway with this, but it's worth having a little bit of awareness about what's going on. So let's have a quick look at what's going on, this deeper dive in this fight, this standoff between Lagarde and Trump, which isn't really a standoff in the direct sense at the moment, but it could well become as we go forward. In my humble opinion, I think Europe will fold. I think they'll have no choice but to fold. But I guess we'll find out. It's just a case of us being aware that it exists. All right. So the updates from last week, obviously mainly stablecoin driven, because that's where the main data is coming from. We're not fully aware of Europe's intentions yet. They certainly don't have true socials and X feeds that allow us to analyze everything they're doing every week like we do with America. So all we do know is Lagarde is insisting that they're going to start the rollout, in other words, the investigation and the testing of the CBDCs in Europe in September. We've known about that for some time. But as regards the US stablecoin side of things, it's pretty easy to see because we know now they've passed this big, beautiful bill. Now, on the face of it, depends which side of the fence you sit on. Again, you've got a lot of lefties who want everything for free. They want everything given to them. They want everybody owes them a living, right? And if it's not going perfect for them, then it's somebody else's fault. We know about all that. The right wing, of course, a lot more bullish. They'll follow Trump like a lamb, and they'll do everything he says and everything else. Neither of those two positions are correct, obviously. Somewhere in the middle is where you want to be, in my humble opinion. The way you get into the middle is to understand both sides of the argument and then put yourself in the strongest position as an individual, right? Realization, education, application. So we know the big, beautiful bill was passed, and we know that in essence, all that basically means is that they're going to have freedom to print another $5 trillion, which, as I said earlier on the other chart, is akin to what happened, even more than what happened actually, in COVID and in 2008-9 after the great financial recession. So for us these days, because we recognized it back in 2008, we observed it through 2020, and we've been building up sound money ever since in the form of gold and Bitcoin, then we just ride into this next wave knowing full well that it was always going to come. And moreover, knowing full well that that 5 trillion will have to be lifted again in a few years, and then again, and then again, and then again. That's why it's important to own assets. And you only have to get a couple of shots at that in life to put yourself on the front foot, as long as you understand how to manage your assets. So the big, beautiful bill got through last week, locked in. Now, that combined with what's coming next, and we've now picked up on the 14th to the 18th of July, which is next week, will be crypto week in the US government. And that they're going to bring more flesh around the bones of the Genius bill. and they're going to bring in the anti-CBDC surveillance, which I spoke about before. Yeah, they're going to put a ban on US central bank digital currencies. This is in the US. No more threat, no more programmable money, privacy and freedom for now, but we take it with a pinch of salt, obviously, because we understand how these globalists work. But as I say, it doesn't really matter because it's all front positive in terms of what's happening with the printing of currency, which puts huge price discovery on sound money, such as Bitcoin. And then you've got the Crypto Clarity Act, okay, which is all about the institutionalization, the ability for selected banks to issue stable coins. Yeah. But the deal is the JP Morgans are the Circles of this world, but they must share 50% of those profits with Coinbase, because Coinbase is the repository. That's where the custody is being managed, right? So if we know all this, then we're looking at it also thinking, okay, well, let's get stock in Circle, let's get stock in Coinbase. Possibly, if you can bring yourself to it, have a go at JP Morgan as well, right? But this is all information that allows you to put yourself in front of ownership in TradFi, which is something we didn't have even a year ago. And as I'll talk about in part 2, if you're releasing working capital from your balance sheet and you're looking at reallocation in terms of where to get yourself involved with TradFi as well as DeFi, then you can start to build up a stronger and stronger P&L. Because at the end of the day, you're looking for yield, you're looking for dividend, right? You're looking for payouts on top of what you've already been building. So these companies that are working inside what is now going to be inevitably passed, yeah, if they got the big bill through, they're going to get these other bills through. We've already got the Genius Act through. Then we just sit through that process. And because hopefully we're doing our job and researching this on your behalf, then you're picking up information that's useful and you can get yourself ahead in life, right? So the banks could be buying up upwards of 6.8 trillion worth of treasury bills using the Stablecoin Act, right? That directly brings existing fiat into blockchain rails through stablecoins. So it's not QE in the traditional sense, but the effect is the same. Now, the QE is already happening. Quantitative easing is already happening because of the 5 trillion they've released on the debt ceiling. And now you're getting $6.8 trillion of fresh liquidity, not fresh, but it's existing liquidity, but it's fresh in terms of stable coins and Bitcoin rails. That basically means that the velocity of money, the velocity of currency speeds up. And what a lot of public Bitcoin treasury companies are spotting, as you've heard on the last couple of minutes, is they're spotting how that will have a positive effect on sound money. Okay, it's all about capital liquidity injections. So Bitcoin and crypto will ride the wave just like we did with stock back in 2008. Post 2008, a lot of people got into stock and gold, yeah, because of these massive seismic changes. And Bitcoin and crypto will ride the wave just like we did back then. All right. So the market structure bill is also on the list for Crypto Week, and that's going to classify assets and other commodities as assets is either commodities or securities, giving further clarity over SEC and other jurisdictions. Right, so we'll see where that leaves us. But all we do know right now is Bitcoin, Ethereum, and Sol, which are the 3 main assets we're looking at, the 2 altcoin assets there. I spoke to you about this last week, protected from future SEC attacks for now. So we've got legal clarity, which means fewer delistings, less FUD, more institutional capital because they're going to be more confident and bullish themselves. And that just means that our accelerated process that we anticipated is going to continue. Yeah. Remember, Bitcoin's the main thing, but we focus obviously on other assets as well, Ethereum and Sol, as we stand at the moment. All right. So to finish the point on this, as I say, it's all been about the big, beautiful bill this last couple of weeks. Now it's going to be about Crypto Week. Yeah. And this chart's quite useful. So we're here last week. We're here now, just a week on. The next week onwards, we'll get the anti-CBDC, we'll get the Crypto Clarity and the Genius Bill. Obviously, Bitcoin's not going to behave like this, but you get the point, right? It's just bringing more and more and more cash, more liquidity into the system. And that's where we're front running. And that gives us the ability, if you understand how to manage your assets, as we'll talk about in part 2, you can prepare for that on top of any decisions you've made over the past 5, 6, 7, 10 years in terms of current capital deployed in projects, or wait for that to release on top of collateral and drive forward now into possibly looking at TradFi positions to complement your DeFi position. That's how we're doing it anyway. All right. So we'll get lots happening, lots of detail on here. It's monetary expansion in disguise, basically, is what they're doing with this. And this is very much about US being very clever in many ways, using stablecoins as a way to bring monetary expansion back into the world. In other words, keeping fiat on life support for another decade or so without just pure QE, although QE is part of it as well. So it's even more liquidity. Well, in the meantime, you're getting the opposite version of that going on in Europe and China, where they're clamping down on this type of model that we're seeing in the US, and they're bringing in this centralized version, which is going to be interesting to observe. And I just can't see it coming through. I honestly can't. I think the US dollar hegemony will persist for some decades to come. I could be wrong. Well, like I say, it doesn't really matter to us because all these are just excuses to bring out more and more and more monetary expansion. And monetary expansion always means hard assets, sound money, gold, Bitcoin, go up in price, period, right? So see how sophisticated we are? All the funds, all the banks will flood in, the corporates will flood in with real size. The next season doesn't start with memes, as we saw a couple of years ago. It starts with laws. That's an interesting quote we picked up on. The next season we're going into doesn't start with memes and, hopeful ideas of, concepts where as individuals we're looking to buy into ideas. This is us front-running laws. All right. We know that Bitcoin and Ethereum have already priced in a lot of these insider flows, but there's a lot more to come. And we've been taking advantage of that for the past 8 months. In 2021, the market rallied on hopes and memes. Like I say, in 2025, it will be on laws, banks, and regulated liquidity. Think about that. Think about that. So if you sat there thinking, I've just not enough Bitcoin, I've not got quite enough this, that, and the other, well, you know what you need to do. And alternatively, you don't need to rush through this because this is going to be a cyclical process. This is going to take time, right? This is going to be something that happens over the next 5 years. So you can lean into it, but you've got to have the knowledge and the confidence and the security awareness and the education and the ability to manage assets going forward. So we'll see what happens. But a new regime is certainly with us. Very, very interested indeed. And just to finish this first part of the call, let's just look at some other geopolitical updates on top of the stable and CBDC conflicts, I suppose. Yeah, standoffs, let's call it. You've got the hash wars and the weapons wars continue. Never forget that, okay? There's a lot going on behind the scenes, and there's a small glimmer of hope that we may be moving into an era where countries are going to compete over hash wars now, as opposed to industrial military complex. Something's going on. Yeah, something's going on. I think you're never going to stop people fighting, but what you can do is put their attention elsewhere. And there's a chance that may happen. And in our opinion, as we've said for years, this is a bottom-up revolution that needs to happen from people's own discovery, awareness, and education, so that they're not so dependent on governments, because a lot of the taxes we pay go into funding wars. And certainly the devaluing nature of currency does, because they keep printing the damn stuff in order to fund wars. If they couldn't print currency, there wouldn't be as many wars. Simple as that, right? They'd be much more localized, much smaller. They certainly be on the scale that we understand today. So we've got to take that away from them. And that can only be done by, in my opinion, doing what we talk about at DBM. Over the next 3 months, $6 trillion in US needs refinancing. This is to do now with what we're going to see with quantitative easing. Trump obviously wants the rate cut down so that they save billions of dollars in interest. Now, we do as well, because every time they bring the rates down, the interest rates, it puts positive pressure on the price discovery of sound money. So another reason we can't really lose is because inevitably they're obviously going to bring the rates down. And the talk is that they're going to do that in July, which is why we're talking about a 120 in Bitcoin in July. Yeah. So a big debt rollover is coming very, very shortly. We're sat front row seat, observing it and taking a net benefit from global decisions at global political levels. Think about that. Add to that a $5 trillion debt ceiling hike, and they've no choice but to turn the money printer on alongside interest rates. Everyone's a winner if you understand how to position yourself. Advisor to Trump, Bo Hines, said the crypto industry is likely to quickly move now to 15 to 20 trillion. That's 10x where we are today. Yeah, we're at $2-3 trillion Bitcoin market right now, as the stablecoin legislation becomes law, which is happening this month. Now, it's obviously not going to go there straight away, but this is what I said earlier. If you're not feeling your position just yet, that's okay. Chase that 0.1 Bitcoin, get it in your life as quick as you possibly can. Do whatever you need to do to put your balance sheet, do extra, do more, save more, consume less, just for this period of time to get 0.1 Bitcoin on your balance sheet. I'll show you how powerful that is in a minute. And don't think of it as a sacrifice or something you don't want to do because you're just living month to month. Do it because you're building a balance sheet. If you're serious, you'll do it. Just like if you want to lose weight or you want to get fit. Senator Loomis, new bill to remove Bitcoin capital gains for payments under $300. Now, this is the other thing that's coming through. This happened also in the UAE. The UAE passed this act just a couple of weeks ago, taking capital gains out from transactions on Bitcoin of less than $300. Now, keep an eye on this, because once this starts in these big countries, it'll go everywhere, because, you know, countries, whether they like it or not, and I'm sat here in Britain at the minute, and there's hundreds of millionaires leaving this country at the moment because of the short-sightedness of the socialist government. But that'll shift the other way. It has to, right? And because the power, the headless, they'll just keep copying what goes on, right? They just haven't got the imagination. You know, he's a lawyer at the end of the day. He's not got any imagination whatsoever in order to bring this type of business philosophy into country management. But they will. So it doesn't matter where you're located in the world, this concept, because you can't put capital gains on money. So it's not fair, right? If Bitcoin is classified as a money, as a commodity, you can't put capital gains on it. Now, the fact that we already understand how to mitigate capital gains in terms of asset management is a moot point, but I'll show you that in the next part of this call. Musk backs the political party, America Party, I think is what they call themselves. This is just very fresh after this weekend. And if you've got your eyes, as you should have, on the actual news feeds that come out of the likes of X and X, etc., then you'll know that just overnight he was questioned. This is Musk. Will the America Party embrace Bitcoin? And his response in big bold letters, definitely from Musk, you know, all verified and validated in his account. Fear is hopeless, so yes. Now, you know, someone like Musk has the ability to completely put rocket fuel on the back of something like Bitcoin. And he knows it, right? But he's keeping his powder dry, obviously. Clearly, he's accumulating. We know he's got thousands and thousands of Bitcoin in his company. But now he's going political. So wherever that's taken us, who knows? Who cares? Right? He's right that it's a uni party, left, right, blue, green, blue, red, whatever. They're all the same, right? As we've discussed. So he's trying his best to now come up with a different form. He's obviously not going to be able to take them on. But if he gets a few seats in the Senate, it can cause what we need, which is a bottom-up change. And who knows, we may still be around in this life to see that happen. But in the meantime, we front run by taking ownership of things that get directly affected as these uni parties continue to take advantage of the world's populations. And last but not least, China's big tech company Alibaba, through the Ant Group, are urging the central bank to authorize yuan-based stablecoins to counter the influencing USDT stables, right? So China, they've got a completely different political system. They can flick their fingers and turn something on because their people are totally subjugated. So if they flip the other way, as they're being advised to by the Ant Group, and move into the stablecoin version of what we're talking about, they're still at the moment working on CBDCs, but it's the probabilities that they'll move to stablecoins and what greater, especially if they want to keep BRICS together, then another reason we're thinking that the Europeans are going to be left high and dry because of the short-sightedness of people like Christine Lagarde. So to finish, as I say, huge amounts of information to take on board there. All right. Every week it's the same. We do what we do on behalf of our client base to download all the information that we can find that's useful to put into one neat hour. All right. It's not about understanding this and realizing this. It's about what you're going to do with it. So part 2 of this call, which is accessible now, as I'll do it live, if you're here live on the Zoom channel with us, But if you're listening to this first part of the call on a recording over at YouTube, etc., then you're going to need to register in to the Academy to get into the recordings, which are accessible through the systems subscription level, and you'll be able to hear me demonstrate in clear terms exactly how to operate a balance sheet, how to leverage that balance sheet into DeFi, and now how to take your steps towards TradFi as well. Okay, so select where you want to be inside the DBM Academy. We've been at it a long time. We know what we're doing. We're very successful. We've got the model. We've got the team. We've got the resources. You are more than welcome to join us, and we look forward to working with you over the years to come. I'll see you on the next call.